Hello students, welcome to the semester 6. Today we will start first chapter, Amalgamation, Introduction, Types, Methods of Accounting, Purchase Consideration. So first topic is your amalgamation, absorption and external reconstruction. Amalgamation of companies as per Accounting Standard 14. The term amalgamation refers to blending of two or more existing undertakings into one undertaking. It contemplates not only blending two or more existing undertaking into one undertaking, but also blending of one by another, which is called as absorption. The ICAI has issued Accounting Standard 14 to deal with accounting for amalgamation. Amalgamation involves two types of company. One is transferee company and one is transferor company. What is transferee company? It means a company into which transferor company is amalgamated. And transferor company means the company which is amalgamated into another company. Amalgamation may take place in any one of the following two ways. A new company is formed to take over the business of two or more existing company. It is called pure amalgamation. One of the existing companies take over, that is absorbs, the business of another existing company. It does not involve formation of new company. This form of amalgamation is known as absorption. Types of amalgamation. Amalgamation in the nature of merger.